For benefit of all members,
Esteemed members who have joined for this webcast by the Board of Internal Audit and Management Accounting, Honorable Vice Chairman and the immediate past Chairman of this committee, Charanjot Singh Nandaji, very esteemed Speaker, CA V. Ravindran, who comes from Salem, Tamil Nadu, India, our Secretary of the Committee, R.K. Bansalji, and people who are also organizing this particular program, who are actually helping us in giving a technical support. Board, which continuously organizes programs for the benefit of members on areas which are of esteemed importance in compliance practices. This particular board, under the guidance of Nandaji, our very esteemed Vice Chairman, because for all purposes, he's the Chairman because he's been with this board for quite some time now. And it is only that he wanted some lighter positions and wanted people like me to gain some experience. He gave this position to me. Thank you, Nandaji. And friends, I'm not going to talk much. Ravindran sir is an expert. He's a master. But the other day when I spoke to him, he said, RK sir, 2 hours may not be sufficient. That much material he has got on concurrent audit. But I know all of you are very eager to hear him, very eager to know about concurrent audit, because I know concurrent audit is the future of the banking in India. It is not the statutory audit, let me tell you, friends. In fact, people always come and tell, sir, what about the fee structure and all those stuff? Yes, things will change. Things will certainly come up to the levels which our members want. We have seen good times. We have seen the worst of the times. We have seen the best times. But let us always be rest assured that good times will always be back again and again and again. And it is only the times that change, but people do not. When we do audit, we are always the same. And whatever we do in the interest of the profession and the interest of the nation. May I now request our Honorable Vice Chairman Nandaji to offer his opening remarks. And after that, we can all start hearing Ravindran sir. Over to Nandaji.
Thanks a lot, Chairman Mr. Rajendra Kumar P, more commonly known as the GST man all across the country. The relevant faculty of the day, V. Ravindran, Secretary C.R.T. Bansal, and all who have come here to go home more enlightened. Ladies and gentlemen, this is the bank audit season. All people are busy in statutory audit. And at this time, the board has come with a very wonderful topic, red flags with respect to concurrent audit. Concurrent audit essentially is a management function. And over the years, it has gained prominence. I don't want to say fees is reasonable, but still, the penetration of concurrent audit has increased in a larger perspective. And therefore, it becomes very imperative that you need skills to perform. You need to know the basic thought process, the basic tools to identify red flags, to identify signs of early warning that an account is going NPA or account is turning fraudulent. And for that, we could not find any other concurrent audit, and particularly how to identify red flags. I am reminded of a couplet which says, "Agar khairat mein milti kamyabi to har shakhs kamyab hota." I will give the English version for people who don't understand Hindi. It says, "Agar khairat mein milti kamyabi to har shakhs kamyab hota. Fir qadar na hoti kisi hunar ki aur na hi koi lajawab hota." So friends, people like Mr. Ravindran are people with rare skills. The English version of the couplet was that if people got competence by charity, then everyone would have been competent and nobody would have acknowledged the contribution or outstanding nature of a man who's competent. So Mr. Ravindran is very outstanding, a man who would guide us. He is a permanent faculty of the board also and is working incessantly to ensure that we add value to the initiatives of the members. So over to Mr. Rajendra Kumar, the chairman of the board, to take forward the proceedings of this session. Thank you. Thank you so much.
Thank you, Nandaji, and thank you for joining us during your travels. Really, that speaks volumes about your dedication. Thank you so much, and hope to see you in the next program very soon. Ravindran sir, all of us are eagerly waiting. Over to you.
Thank you. Vanakkam, and I'm very happy to be with you. First, my thanks goes to our chairman, CA Rajendra Kumar sir, and Vice Chairman Charanjit Singh Nanda sir. And for the first time, I am seeing Aarti ma'am in the live program. I used to hear her words, and very happy to be with you as a faculty of today's program, Red Flag Account. So it's my favorite topic. So the name is Red Flag, but this is my very favorite topic, and definitely I'll cover the maximum extent. Even when I read the entire material, I know that 2 hours are not, it is not sufficient for me to cover the entire syllabus. Anyhow, I'll definitely share to the maximum extent, and I also request the participant to participate effectively, and whatever be your doubt, you can put it in the chat box or even the question box, so that I can give the answer to your question. And let me start the presentation now. And red flag accounts, and it is a very dangerous area wherein every chartered accountant, not only concurrent auditor, all auditors, they have to take care, because the Reserve Bank has come out with a clear indication that if there is any fraud, if it is a fraud and that is there at the bank, and they have come out with the direction saying that if any fraud is undetected during the course of audit, then the auditor is held personally responsible for the loss to the bank, apart from losing our practice and facing all regulatory authorities' action. And they made a very strong word saying that if there is any fraud and if it is undetected, then the loss has also to be borne by the chartered accountant who did the audit. So now the concurrent auditor is the first person, because they are all called as early warning signal person. So if they fail in that duty, then definitely they will be the first person to be affected. So I request every chartered accountant who is, who are all viewing this program, please be sincere, please be dedicated to your presentation of your skills, and don't depend only on the staff. Don't depend only on the staff. Please go to the branch. Before signing the report, you have to analyze and you have to sign it. Because now RBI has already started to issue notices to the chartered accountants. Why you have failed to identify the frauds? Even particularly with reference to NPA, which is the latest problem that are happening in the statutory audit. Almost, if you failed to identify a NPA, or we can say that non-classification or wrong classification of NPA, you will definitely get notice from RBI. So this is a very dangerous thing. One is if a fraud is undetected, and if you fail to identify the NPA also, you will be getting notice from RBI. And this is a base from where we have to identify the transactions. So they say that bank frauds is the end product. So work in process is called as red flag account, and raw material is called as early warning signal person. This is the base. So that is why I started from fraud. So from fraud, that is before one stage is called as red flag account. And before that, you have to see what are the early warning signal persons. We will go in detail, because this is going to be very interesting one. And second thing, it is going to be very important. Why the concept of red flag account? Because now the bankers, they saw that the fraud situations have increased, because there are a lot of frauds, incidents of frauds, and novel types of frauds are coming. Even though you are very well versed in the subject, and different types of frauds are coming. For that, the RBI has come out with a clear indication that if you identify the red flag account, then you have to be very, very careful. This is a base based on which this RFA is being noticed. And generally, in all areas, you can identify the frauds. I can say that almost all the balance sheet items, you have got a fraud. In almost all the P&L account also, you have got a fraud. So, even in that balance sheet, loan portfolios play a very, very vital role. So that is why you have to be very, very careful, and particularly if you are going for the concurrent audit, your position is very dangerous. This is a caution I am giving, because I, as a member, as a friend of so many chartered accountants, I used to get a lot of phone calls from the chartered accountants. Sir, bankers, they issued this notice because I failed to identify fraud. So though we are helping them, but it is very, very difficult for them to go ahead. So my sincere request to the fellow members, before going to the topic of red flag account, I want to say only one request. Please do the audit, do the concurrent audit, any type of bank audits very seriously. And we know that our chairman has said that the fees are very less, but he will definitely take a lot of steps so that we will get more fees in the concurrent audit. That is a different issue. Whether it's a small fees or big fees, we are sailing in the same boat. We have to find the things very carefully, very cautiously. If we fail to do it, then we are in trouble. So this is the stage. So that is why I said early warning signal is, we can treat it as a raw material, and work in process, that is red flag account, that is called as work in process, and bank frauds is a finished product. So to get the finished product, then you have to do the work in process. To have a very good work in process, you have to go to a raw material. That is, the early warning signal is the first stage, and second stage is red flag account, and third one is bank frauds. And it occurs when? Where we have to find this red flag account? Where are the chances where you can identify the red flag account? You can identify in the concurrent audit, stock audit, statutory audit, credit audit, revenue audit, and all types of bank audits. All types of bank audit, you will get the red flag account situation. That means in all these types, you will definitely get a chance to identify the fraud. This is the stage based on which you have to do the audit. So everywhere the fraud will be there. So you have to be very, very careful. You have to identify the red flag account. That's a slab. But in spite of the slab, the RBI has come out with a clear indication that even below the slab also you can do the red flag identification. So this is the latest thing that they have introduced in their 2020. Previously in the LFAR, there was no such thing, because now the LFAR is related to the statutory branch auditors. In that, they say that red flag accounts, that is, red flag concept was introduced by the RBI to get the banks to get an early warning signals, which include raids conducted by the regulatory and tax authorities. It's only one thing they have said in this red flag. Once an account is red flag, banks are mandated to complete its forensic audit within 6 months and decide whether it's a fraudulent or not. So first thing you have to see, if the first thing is you have to identify whether that account is eligible for the red flag account. And if you identify one account as red flag account, and you have to report this to the banking authorities, and they have to exercise the forensic audit. So forensic audit, they have to complete within 6 months. And this forensic audit people, they have to say whether it's a fraudulent or not. So this is also another professional opportunity available to the chartered accountant. Please complete our FAFD program. So you'll be getting a lot of work from the banks. So normally we are depending only on the bank audit, but with this type of identification red flag account also, we will be getting a lot of professional opportunity also. So those persons who are not completed FAFD, please complete that course also, so that the bankers, they may appoint you as the forensic auditor. So first thing, red flag account, you have to identify, and the base thing is only one they say that raids conducted by the regulatory and tax authorities, there are so many reasons wherein one account has become red flag account. We will discuss later. And banks are competent because they have to conduct the forensic audit. This is a base. So this is one of the LFAR requirement, which every statutory auditor, statutory branch auditor, they have to give in their report. And what is the objective framework in dealing with the loan frauds? Normally, the frauds are there mostly in the loans. So if you want to do the red flag work, then we have first step is every banker, they want to prevent the fraud. And early detection is required. Early detection is required. Before going for further fraud, you have to detect it at the early stage. And every banker, they have to report to the Reserve Bank of India. And after the red flag account is identified, then the audit has to be conducted. And the audit has to be conducted from the investigation agency source. As an investigation agency, the forensic auditor, he has to conduct the audit. Then they will fix the staff accountability. So this is the objective, because in order to avoid fraud, they have to carry this. First thing, they have to prevent the fraud. And if there is any fraud, that has to be identified early. And if there is any fraud, that has to be reported to the Reserve Bank of India. And after that is being reported to RBI, then they have to conduct the forensic audit. And that forensic audit, they fix if it is a fraud, then which staff is accountable. What the RBI views on auditors was non-detection of fraud. This is what I already said. If any fraud is undetected during the course of audit, then the auditor is held personally responsible for the loss to the bank. That is a word they use, for the loss to the bank. And they are answerable to the ICA, RBI, banks, regulatory authorities. So this is what RBI expects a chartered accountant to identify the fraud. If you fail to it, then you are all responsible for this loss to the. That means you are a party to the fraud. So suppose if the fraud is 2 crores, then your personal property will also be at. So this is a thing. So you have to be very, very careful. You say that I have received only 10,000 rupees, I am responsible only for that. No. So if you fail to identify the fraud, then you will be put into a lot of trouble. So early detection of frauds. So how to reduce the frauds? So if you identify the fraud at a very early stage, so the fraud incidents will be reduced and necessary corrective actions will be carried out. And what is the importance of red flag account? It's an important step in the fraud risk control. It's all theoretical. I'm just touching the theoretical point now, and I am going for the practical issues on the later part of my presentation. If there is any suspicious fraudulent activity, it is that you can identify from the early warning signal and put the bank on alert, warning towards fraud. Suppose if there is an early warning signal, let us take if there is a raid, income tax raid. Why the raid has taken place? Everything you have to see. Is there any violation of law? Whether that violation of law affects the banker's funds. So this is the early warning signal. So these raids will definitely make the bankers attention in a different manner. So this put the bank on an alert basis. And what's the threshold? This is a very, very basic thing. So, sir, I want to do the red flag account. So, what is my limit? So it is mandatory. Suppose if the loan limit is 50 crores and above, and if you identify the fraud, it has to be reported immediately. So they say that it is 500 million. So it works out to 50 crores and above, irrespective of the lending arrangements. Whether the loan is being given on sole basis, that is individual bankers, whether they have given the loan or whether they have given the loan on the multiple banking system or whether they have given the loan on the consortium basis. Suppose if it is on a consortium basis, suppose if there is any red flag account notice in one of the banks, then the same thing has to be reported to all the other participating members. So they will be very, very careful. So it is a mandatory. This 50 crores is a consolidated limit of multiple banking, consortium banking, and sole banking. And even the RBI went on to say that even if the amount is less than 50 crores, no problem. It is left to the discretion of the banks to decide. But that LFAR is indirectly say that you have to find the red flag account. So it is though it is a discretion of the bank, indirectly RBI say that in LFAR, you have to find the red flag account. But in red flag account, they have given a ceiling of 500 million rupees. So it is left to the discretion. Even if it is 2 crores also, you have to cover that point in your report. So red flag is the, we can say that it's a working process. So based on the early warning signal person, you can come to a conclusion that there will be a chance for the fraud. So it should in between early warning signal and the fraud. So it is left to the discretion of the bank, even though the limit is less than 50 crores of loans. You can exercise the, you can conduct the audit from the red flag account. And reporting requirement. So when you identify one account as red flag, it has to be reported to Reserve Bank of India. If the fraud, if the red flag account, if it crosses more than 50 crores and above, you have to report in CLIC and CLIC date platform and report all frauds to Central Fraud Monitoring Cell of Reserve Bank of India, Bangalore. Department of Banking Supervision, they have to report, and this will be taken care of by the bank's head office. Don't worry at all. But I am telling the procedure, they have to report to the Reserve Bank of India, even though the limit is more than, the limit costs more than the threshold limit of say 500 million, they have to report to CLIC. And simultaneously, all the frauds, if it is related, if it has occurred because of RFA exercise, then they have to report this to Central Fraud Monitoring Cell. Then auditor has to verify all the above reports. Suppose if you are a concurrent auditor, if you are going to the bank, and if these type of things have already happened, so then you can call for the reports, you have to verify. Suppose if you are a central statutory auditor also, there also you have to verify each and every. And tracking of early warning signal. There will not be any special exercise. It is an ongoing process. It's an ongoing process. For this, you need not have any additional exercise. You can do it in a continuous activity, you can identify. And it acts as a trigger for any possible credit impairment. We will discuss all the kinds of early warning signal situations on a later point of the presentation, but it is not a specialized activity, special activity. It's an ongoing activity, and it triggers that this situation may lead to fraud. So this plays between the credit risk and fraud. So initially, the managers, they have given the loan, and due to some risky transactions or due to some misbehavior of the borrowers, that may land in the fraud. So this warning signal is placed between the credit risk and fraud risk. And it's a first thing for this, you have to study the annual report as a whole. So in the statutory auditor, he will give, if there is any red flag account, he will give in his reports. And even sometimes they used to go and report that these are the bad situations that are happening in the banks. So you have to not only read the financial statements, you have to read the board report and management discussion and analyze, and you have to analyze the statement. And if there is any related party transactions, that will also be stated in the bank balance sheet. That is in the audit report, he will give. So you have to read the entire annual report as a whole. Don't read only one portion. You have to read the entire report. And who has to report? So these reports have to be reported to this type of red flag account transactions, early warning signal persons. They have to report to Reserve Bank of India, and the person responsible is FMG, that is Fraud Monitoring Group. They have to report all the that is red flag accounts of 500 million and above, where the EWS early warning signals are observed. And next one is they have to report the decision, that is FMG, Fraud Monitoring Group. They have to report the decision to CMD or CEO every month. This is a very, very important. Even as an auditor, if you are going for the head office audit or if you are going for the regional office audit, if there is anything to has to be reported, then you have to call for the report, you can verify. So this is the duty of the concurrent auditor. He has to see whether the proper reporting is being done by the FMG, and you have got full right. So one can think that, sir, I have got no right to ask for the FMG report. You have got the right to ask for the FMG, because based on that FMG report, you can come to some other conclusion also. So please ask for the FMG report if anything is, they have reported to RBI, and put up the report of RFA to special committee of the board for monitoring and follow-up of frauds. Report regarding remedial action taken along with the current status. If there is any report is there about the red flag account, this has to be reported to the special committee of the board. See, in each and every bank, you have got a board, and there's a special committee to monitor these type of frauds. You have to ask for the report for your reference. You can go through it. You have got a full liberty, because this is a very, very important thing. One can say that I am auditing only the branches. Don't worry at all. You have got to do it. You can ask and you can do it. And it's a remedial action taken along with the current status. So what is the latest position? That also you have to ask and you have to see. And in case if you delayed in the early detection, suppose if there is any delay, you have failed to identify, or there's a delay in the identifying the fraud, then banks are at the loss. So detection of frauds take a long time. So if you are going on regular convention, regular thing, then it's the bankers will find can find the fraud only after some time. It will take some long time to identify the fraud. So banks, they have to report those frauds as and when they exhaust the chances for further recovery. First thing, it's a practical thing what the bankers they are doing. First, if they identify the fraud, what the first step they will take? First thing, they recall the loan. They want to recover the amount immediately so that they will not be put into trouble. So they want to go for the recovery of the loan. If the loan is recovered, then everything is solved. Then fraud has not come. Here, I want to tell one important thing. I have got very close relationship with the police, that is in Tamil Nadu police, and they say that we will not disturb you till you disturb us. This is the statement given by the police. We will not disturb you till you disturb us. And second thing, they say that it is a theft, though it is being reimbursed, it is also a theft. So theft is theft. Just like that, fraud is fraud. Even though that has been, the money has come, but the police will say that, no, fraud has taken place. We will go and make the inquiry if there is any complaint. So the first step, the bankers, what they want to do is, we want to recover our money back. So this stage will definitely take long time. So only if they are not able to recover the amount, then they report this under the fraud. So this takes a lot of time. So this type of delay forced the person who committed the fraud to do further fraud. And there are also same type of fraud and also some other type of fraud they will do it, because there are no person to take care of the fraud. So the chartered accountant who are going for the concurrent audit, you have to be very, very careful. Even I want to share one of my, one advice which I used to give to all the fellow members whenever I go for the auditor. Auditors are not safe inside the branch when they detect the fraud. So your life is in danger. Even I got 2 times life threatening in my audit career. And okay, what to do? So this is the fate of chartered accountants. Once if we identify a fraud, even nowadays I will tell, and most of the statutory auditors, they found various types of red flag accounts. When they discuss this with the branch manager, they say that, sir, don't put this in RFA, we will be in trouble. They force the chartered accountants not to report the transaction on the under the RFA. So my sincere request to the concurrent auditor or statutory auditor or revenue auditor or stock auditor or credit auditor, please don't yield to the pressure given by anyone, because your observation may be very serious. So don't hesitate to give this type of reports. You have to give. because you are the custodian of the public funds. You are the early warning signal person. Don't be afraid. Even somebody can come and say that, sir, next year we will not be getting the audit. Don't worry about it. It is not the audit. It is not the audit. We can learn from various sources. The thing is, I want to say one very important thing. If you identify one accountant as the red flag account, please don't hesitate to report. And you have to report along with all evidences, So that's why I said 2 times I have got the life threatening. Okay, no problem. But I am safe. Because we have to save our skin. So don't hesitate to report. And in case if you delay the action, suppose if you make the delay in reporting, then definitely bankers will be at loss. So this will also put the bankers in a very critical position to take against the steps or action against the unscrupulous borrowers. So these types of fraud will definitely increase the loss to the banker. So as an auditor, you have to give the strengthening power, or we can say that you have to give the monitoring process in a very positive way. So whatever be your suggestion, you can give your report, and don't do the audit very casually, because you are also responsible for the loss to the bank. So you have to be very, very careful. That is why I am very, very happy that our institute has taken this red flag account as a topic of today, because this is the basis based on which everyone has to do the audit. And if you fail to detect the fraud, then it is not only you are at loss, the bankers are also at loss. So you have to be very, very careful. And I'll give a lot of examples of early warning signal person. And here they have the RBI has divided the checks into 3 parts. One is pre-sanction and disbursement and annual review. So here I'll talk with the pre-sanction. Okay, a person comes to the bank with the intention of getting the money to do the business. And some person may come to the bank with the intention to cheat the bank also. So everything will be taken care only at the pre-sanction stage. So whenever any person comes to the bank, when they approach the manager, what he will do? Well, he will do, okay, you submit your KYC, we will verify the KYC. We will verify the KYC. On submission of KYC, he will take the CIBIL report. In the CIBIL report, he will track the past records. Sometimes when they track the past records, you would have identified the one-time settlement, or some return of accounts will also be there. So if that is the case, then he will simply ignore. Then he will go to after satisfaction, he will go to the bank. He will go for the inspection. Even in the inspection, if the manager has to exercise a proper care. If he has not taken proper care, then there will be a chance for the fraud, because at the earliest stage itself, the bankers would have stopped the party to come into the bank. So there are a lot of situations. It starts from the application. The intention of the borrower is very, very important, but you are not there. But as an auditor, your audit should commence when you have to start the audit from the application. So what the application says, for what purpose they are given the application, what are the records they have submitted, everything that you have to see. Next one is loan is being dispersed, and then every year the manager has to conduct the audit. So what are the important things that you have to see with reference to pre-sanction? This is a content that I have taken from the RBI circular. So independent information market intelligence of the borrower. The circular says that the manager, before sanctioning the loan, he has to obtain the independent information about the borrower. And what about the market report of the borrower? In olden days, they used to get these type of reports. Present times, I observe that so independent inquiry will be very less. They are 2 guys or 3 guys, then they come to the conclusion. But it should not be there. So as an auditor, you have to see whether the manager has conducted the independent information and market intelligence. He has to record the same thing in the process note. Because after the receipt of application, he has to process the loan. For that, he has to prepare a process note. In that process note, there is a one column, the background of the borrower. In that, the manager has to commit from the following persons. I obtained the information, positive information, and this is the market report of the borrower. Everything should be recorded in the process note. So, as a concurrent auditor, you must do the reading of process note, because reading of process note, you will get a lot of information. So this is where we have to start the audit. Normally, we are starting the audit from application. Now the manager is in the process of sanctioning the loan. For that, he has to prepare the process note. So as a chartered accountant, as a concurrent auditor, you have to go and read. You have to ask for the process note. In the process note, you will get a lot of information. You will get a lot of information about the borrower and all the registration licenses. Then the purpose of the loan is required for what, where, from to whom he has to give the money, and even whether he is a willful defaulter or the NPA party or a fraudulent person as declared by the RBI, or whether he is a blacklisted customers. Everything you will get from the process note. So this is a very, very important thing that you have to see. Next point is borrower involved in any legal dispute. So during discussions, normally the banker, they will some prudent manager, what he will do, you will have lot of discussion with the party. Then out of frustration, that borrower will say that, I've got a legal dispute with the government, I've got legal dispute with my neighbors, I have got legal dispute with the police or some guys. So if there is such a thing, then the bankers, they will be they will definitely take a lot of steps, lot of caution before sanctioning a loan, and these also have to be recorded in the process. So if the borrower is involved in any legal dispute, then they will be, that everything has to be recorded in the process. Next one is raid conducted by the government. This we'll discuss later. In case if the government has conducted any raids, that is income tax raid, GST raid, excise raids, even PEMA violation, everything, there will be a chance. And if the raid has taken place, then the bankers, they will never give the loan. Suppose after sanction of the loan, if the raid is conducted, it comes under the category of RF, that is red flag. But even pre-sanction stage, the manager has come to the conclusion, they can get the information that a raid has been conducted on the party, they will definitely hesitate to do the transaction. In case, if it comes to your knowledge as a concurrent auditor, you have to see why the manager, he has given the loan to this borrower, even in spite of the information that a raid has been conducted by the government. If any raid has been conducted by the government, that means it's a violation of law. If there is any violation of law, then that party will go to any extent. Why the manager has considered, why the manager has ignored this point, that you have to take note of it, and everything has to be recorded in the process. Everything has to be recorded in the process. So raid conducted by the government, and strictures passed against the borrower by the government. Sometimes the government would have passed some strictures against the borrower, and this information he will get from the party. So this is also another condition that the manager has to consider before sanction of the loan, pre-sanction point. And if you have to see whether the person is a fraudulent person. So there is a list available in the website, that is a fraudulent person list of RBI. This list, only the bankers, they have got the access and not you. So you can ask the banker to record the same thing in the process note, saying that, sir, this person is not coming under the category of the fraudulent person. This person is not coming under the category of willful defaulter. And this party is not coming under the category of blacklisted customers. So blacklisted means the RBI has blacklisted that no further loan should be given to this party hereafter. So he is a blacklisted. So no bankers will definitely sanction the loan to them. So this list you have to verify. This list you can find from the process note, because there is a special column in the process note. Loan process note is this party covered under the category of default category or a willful defaulter or fraudulent person or blacklisted person. And the same thing is the ROC also you can get the list. And even some other government agencies also declare that he is a willful defaulter in paying the rent to the temple, or he is a defaulting party in payment of income tax or GST. So if there is any defaulter list, then the bankers, they will be very cautious to sanction these type of loans. So against the loans to these parties. And this willful defaulter list and fraudulent person list, you also have to verify during the concurrent audit, because these are the areas wherein the RBI has cautioned that the bankers should not sanction these loans. They sanction the loan, they have to be very, very careful. And now the loan has been sanctioned. Now they have to disperse the loan. So when they disperse the loan, there are three. The first stage is it is pre-sanction. Now in disbursement stage, the banker, they have to issue the sanction letter. In sanction letter, there are four conditions. One is about the party. When you go and see the banker's sanction letter, you can see about the party. So first para, first thing you can see about the party. There is name of the party, address of the party. Then what is the loan amount required? What is the interest rate? Whether it's a funded loan or non-funded loan. Everything will be there in the loan sanction letter. That is the first. Second part is pre-sanction. When pre-disbursement conditions, because loan is sanctioned. Now, before release of the loan, the parties, they have to fulfill the following conditions. That is the second stage. And third stage is post-disbursement stage, post-disbursement sanction. After sanction of the loan, after release of the loan, the bankers or borrowers, they have to fulfill the following statements. And fourth part is general terms and conditions of the bank. So as a banker, before releasing the loan, the bankers have to see whether the borrower has fulfilled all the terms and conditions. These are the early thing. So if they fail to identify, if they fail to work on this point, definitely there will be a failure on the party to commit the fraud. There will be, definitely they will commit the fraud. So adherence to the terms and conditions of the sanction. So as a concurrent auditor, you have to see whether the banker has followed the instruction given by the sanction authority, or whether the borrower has followed the terms and conditions sanction given in the sanction letter. So adherence to the terms and conditions of sanction. Here, I'll tell one important income leakage. See, every concurrent auditor, they can include in his report. See, there is a one class in the general condition class. If there is any non-fulfillment of terms and conditions, then the bankers, they can charge 1% extra interest. So that is also a revenue leakage. That is also a revenue leakage. So 1% extra interest you can charge. So this is a general condition. Normally, what bankers they do, okay, since the party has not fulfilled the terms and conditions, we will charge extra 1%. So that is a normal thing because there will not be any income leakage. But why the party has not fulfilled? Here I want to tell a very important case because it's a very important. See, one of the customers, he has approached me, sir, I have got a loan from say X bank to the tune of 9 crores. Sir, I want additional funds of 5 crores. So in total, I want 14 crores. Can you help me in preparing the project reports or CMA and everything? I said, yes. Then that bank, first bank, that is X bank, what they said, sir, you have to come and renew the loan. And the renewal conditions, they put that you have to take Udayam registration certificate. Udayam registration certificate is the latest small scale industry certificates, compulsory. Almost all these certificates have been have gone. And at present, if you want to be classified as MSME unit, you have to get the Udayam registration. Previously, they started with the small scale industries, then the entrepreneur memorandum, then Udyog memorandum. All these certificates have gone. Now, only Udayam registration certificate is in existence. Then I asked the party, sir, it is only very simple thing, sir. You can go and get the Udayam registration. Then the party said, no, sir, it is very difficult for me to get the Udayam registration. Then I probed further. why you are not interested to get the Udayam registration? He said, sir, I have given a balance sheet, one for income tax, one for GST, one for bank. So for income tax and GST, even in the income tax and GST also, they have got different thing. So just because of Udayam registration, if you take the Udayam registration, in that Udayam registration, you will get figures that are reported only to income tax. They say that if the bankers, they notice that, then they will definitely make a complaint against me that, sir, you have defrauded the bank. Even taking the Udayam registration, viewing from the Udayam registration, also you can come to a conclusion that whether the party has submitted the actual balance sheet, actual turnover to the banker or not. So everywhere you can find the report. So just because of this Udayam registration, I came to the conclusion that this party is a fraudulent person. Even he fabricated the GST turnover also. I don't know how they did it. So these are the things that when you are going for any audit, you have to see the Udayam registration. In Udayam registration, you can see what's the turnover they reported in the last year. And if there is any difference, that means the party has given a false P&L account. And another additional point is with reference to financials, the statutory audit is being signed by, say, some A auditor, and tax audit, income tax P&L account is being signed by, P&L balance sheet signed by one auditor. Tax audit is being signed by some other auditor. Even sometimes, vice versa will also be that. So the chartered accountant has to be continuously. There is only one chartered accountant has to sign, and the present chartered one has to sign the statements. This you can notice from the stock and debtor certificate, because the statutory auditor is one person and stock and debtor certificate is signed by another auditor. If that is there, then you have to ask why there are two auditors who have done the signature. So this is also another important point that you have to see. And then first thing is you have to see whether the party has followed the terms and conditions of the sanction. And sometimes the bankers, they say that not to do the business, not to help the business, they dilute the terms and conditions. If that is there, then as a concurrent auditor, you have to see whether all the terms and conditions of the sanction have been followed by the bankers and borrowers. If it is not followed, don't hesitate to report. Don't hesitate to report. You have to save your skin. This point you have to bear in mind. Because if there is any loss to the bankers, you are responsible. And even your report will also be wrong. So they sanction them. And if there is any dilution of terms and conditions, that also you have to be very, very careful. And for this RMG, that is report risk management group, has to report the dilution to the sanctioning authority immediately. So risk management group, so you have to submit the report to RMG. Then RMG in turn, they refer the matter to the sanctioning authority. So as a concurrent auditor, you have to see whether there is any dilution of terms and conditions. So this is an ocean. This sanction is an ocean. This is sanction. Reading the sanction letter, it's a very, very big area. And you have to go every point. Each and every point you have to take care. And sometimes they say that you have to take the credit rating before release of the loan. Normally bankers say that, sir, credit rating done by the outside agency, we can take later, but first you avail the loan. If the credit rating agency done the exercise, they found that there is a fraud or something, the company is not functioning. Sometimes the company has diverted the funds. Everything you can find from the credit rating agency report. In case if the managers, they avoided this, then they release a loan, then the bankers' funds are in in dangerous position. So in case if you find any dilution of terms and conditions, you have to do it. And this is a thing that you have to see, you have to do the annual review. So as a concurrent auditor, normally you are doing the audit every month. But after that, after the completion of 1 year, you have to see, once again, see all the transactions, because every month you can see sometimes you would have omitted to see some important points. Say that is after completion of the audit of 1 year, you have to do the annual review, and you have to see everything from the fraud angle. Because when you want to do from the fraud angle, then you have to go for the early warning signal. Then from there you can start the audit. So this stage you have to do it, and you have to see is there any diversion of funds. I'll see. I'll tell very important thing as per the RBI's fraud as per the RBI's circular on fraud. I noticed that diversion of funds amounts to fraud. Diversion of funds also amounts to fraud. This is also one of the early warning signals. Suppose the loan is sanctioned for the machinery. Normally, the bankers, they have to release the funds only to the machinery supplier. But instead, if they have given the credit to the customer account, then the customer would have diverted the funds for some other purpose. So it amounts to diversion of funds. So the mistake starts not only from the customer, it also starts from the banker's carelessness or banker's collusion with the for the borrower to utilize the funds for different purposes. So if you have availed cash credit loan, if the customer has availed cash credit loan, please go through the debit of cash credit account, where the money has gone, whether it has gone to sister concern, whether it has gone to some other company, whether it has gone to some shell company, whether the money has gone for the capital investment. So everything you have to see. So diversion of funds, it amounts to fraud as per the RBI's or fraud circular. So please see, because you are on the seat, you are the person you are all called as early warning signal person. You have to identify, is there any diversion of funds? This you can notice, you can get only from the annual review. Then stock statement. So this is also a very, very important area. In this stock statement, I will highlight a very important thing. See, in one of the cases where it has come from my area, from my Salem surroundings, there is a company, it's a limited company, it's being audited by the chartered accountant who is a statutory auditor. And in his report, he has reported that the company is not running, is not having any electricity bill, even the company is not having any stock statement, stocks, any production details. See, everything he has reported in the negative. That he has availed something around 35 crores from a bank. He has availed some 35 crores from a bank. And the banker say that, sir, once in 6 months, you have to submit the stock statement and the data statement duly certified by the chartered accountant. So this chartered accountant, this party has approached the statutory auditor, and statutory auditor says, no, I will not sign the stock statement because you are not carried out any activity, but I will give you a nil report and I will give only negative report. I will not issue the stock and data statement. Then he has asked the statutory auditor, suppose if I get this signature from some other chartered accountant, can you accept? Then can you object? He said, no, it is not my fate, it is his fate. So he kept quiet. Then the borrower has approached one young chartered accountant who is only 3 months old. That is, yes, from the date of passing, yes, 3 months, it was only 3 months. He has approached an youngster and he has narrated the thing to the young chartered accountant saying that, sir, my statutory auditor, he was out of station and I want immediately I have to submit the report to the bank. So otherwise I'll be losing something around 20 lakhs in the form of penalty. So can you give the certificate? We will give you some very good fees. So he actually offered 5 lakhs fees to the young chartered accountant. And he said that, sir, we will give management declaration saying that the stock is this much and this is the management declaration and this is the data position. Everything they have given the management declaration and they have given the letter to the young chartered accountant. The young chartered accountant, without verifying the genuineness of the management declaration. So here the failure of the chartered accountant, without verifying the genuineness of the statement, he has blindly signed the stock and data statement. Then in the meantime, the borrower has already colluded with the bank officials. There is a present team of bank officials, they have already colluded, and this chartered accountant certificate has been accepted by the banker. Then for almost for entire 3 years, he has obtained 6 certificates from 6 different chartered accountants. And for every one of them, all they paid very good fees, and all are very youngsters, all are youngsters. Because he has tempted the youngsters by way of paying more fees. So now the next management team came and they found that no stock was there, no production was there, so the company is not functioning, and this borrower has ran away. then this case has been referred to CBI. And now all the young chartered accountants, all the 6 chartered accountants have been asked by, all the 6 chartered accountants, now they are running after CBI to furnish the details. So this is a thing very much important. So stock statement, don't take the stock statement very lightly. And sometimes they ignore the creditor figure, sometimes they fabricate the creditor figure, they fabricate the debtor figure, they fabricate the stock statement figures, and even sometimes the stock statement would have been signed by the staff of the borrower. All this you can find from the stock statement. So stock statement is a very, very important area. That is, stock statement means stock and debtor statement is a very, very important area. And is there any stress in the group? So this account may be good. And if there is any stress in the other group, that also you have to see and track market development of the client. So this market track, so it is not the duty of the auditor, but anyhow from the accounts, you can go to the extent of verifying that the statement produced by the borrower is correct. Last year, he has achieved a turnover of 25 crores. This year, he has achieved a turnover of only 10 crores. Why there was a sudden default, sudden fall in the sales? And suddenly the purchase has increased, sales has reduced. So everything will also be there. So you have to, as an auditor, as a chartered accountant, you have to observe the tracking of market development of the client and following up of the stock market movements. This is a share market. So why the share market has, that is, the share prices have increased, why the share prices have fallen down, that also you can see from the annual review. And study not confined to the borrower, but to the group as a whole. Suppose there are some five groups of the same concern, and four groups would have got the loan from some other bank, and only one group is available at this branch. So you have to study not only this group, but group as a whole. This, if it is possible, in the annual review. So pre-sanction, then after disbursement, then annual review you have to carry out. Now, in each and every fraud, I can vouch that staff involvement will be there. But most of the staffs are not are genuine. Most of the staff, they are genuine. So in order to motivate the employees and the management, now they started to give rewards to the employees who have found out the fraudulent activity. So now this is the latest trend. So you can ask the staff who has received that type of award from the management. Then if anybody says that, sir, I have received, then you have to go and ask, what is the modus operandi, how you find this, and what are the types of fraud that you have come up. Even I want to tell one very important thing is, during the bank audit, the professional informer of a bank is the sub-staff of the branch. Because sub-staff will always be there. He will not leave the branch. He will be there for 30 days, 30 years, 20 years, 25 years. He knows what has happened at the branch. So whenever you are going for the concurrent audit, even to find the red flag account also, he will definitely help you. So you have to be friendly with the sub-staff. Then you can get a lot of information. So encouragement, you have to encourage the sub-staff to provide the information. So this type of thing will definitely help you to identify the red flag account and ask them to give it with the reason and support their views. So then you have to go and ask the staff how you find the fraud and what are the steps that you have taken and how you report, why the management has accepted you as a fit person to receive the receive the award. And this is a very, very important thing. Now bankers, they have come out with the protection to the staff, because whistleblower policy. What's the whistleblower policy? Suppose if any staff has reported any fraud, he should be safe. He should be safe. This is the basic idea of the management, because they will definitely protect the staff from all types of problems, because even sometimes I heard that I came to know that some staff have been given police security because he has reported a fraud. Because till that conclusion of the fraud identity, he will be in trouble. So the protection to staff will be there under the whistleblower policy, and fraud monitoring group has to hear the views of the employees. So now the management has taken one view that, so normally in the staff meeting, they request the employees to offer their views. Is there any fraud? And even they went on to say that, so what are the weaknesses that you can identify in the banking sector? So you can give a suggestion. From that manner, they can plug the fraudulent activity. So now a fraud monitoring group, they started to have the views of the employees. If there is any fraud, then management, they will fix the staff accountability. What is the staff accountability? Here, I want to tell one very interesting case. This is a very, very interesting case. I've gone for a statutory audit. It has happened in my statutory audit. When I scrutinized the account, I found that the manager has sanctioned some 25 lakhs without some, there is each loan contains 2 lakhs. So almost 25 accounts, he has sanctioned the loan. Say, let us take, it is in the month of April 1, they have sanctioned. So within 4 months, the manager has filed the case at DRT because they say that entire loan has become NPA. So it is called as quick mortality account. So you can also see, is there any quick mortality account? So quick mortality account is the account which has become bad within a period of 1 year from the date of sanction. Here in this case, the manager say that, sir, we have filed the case before court of law. That is before DRT, we have filed the case. Then I asked you, sir, it is only 4 months old. So even you are not declared, just now you have declared NPA, immediately on declaring NPA, you have gone to the court. Then I probed further, then I found that all the 25 parties are the relatives of the manager. And all the money have been swindled by the manager. Then I asked, sir, why you have gone for the court? He said, no, sir, I know that the money has not come. Then this matter has been reported to the regional office, and the regional office has said, okay, you have done the quick mortality, then we will reduce your 2 increment. The fraud is to the tune of 50 lakhs. But they have given punishment for decrease of only 2 increment. Then when I asked this, then regional office say that, no, we have already given the punishment to the staff side. You don't go for the further inquiry. It is not required from your side. And even they can say that you have got no right to inquire. So in my audit experience, I want to tell you, if anybody prevents you from the audit, and if anybody commands you, there will be some fraud. If anybody hides the information, or if anybody fails to furnish the files, so everything will definitely lead to the fraud. This is all called as early warning signal person, because you are making some inquiry, he is not cooperating. Then this will definitely lead to the fraud. Here, the regional manager or regional office, they say that, no, we have already given the punishment to the staff, don't go further. But I went further and found that there was a fraud of 50 lakhs, and I reported this to management and as well as to RBI. And they came and inquired, and they found that all the invoices are fabricated. All the money have gone only to the relatives of the manager. And now he was dismissed from service. So if you identify one thing, then immediately the management will fix the staff accountability. But in spite of staff accountability fixation, you are there, you have to inquire whether the staff accountability is correct or not, whether the punishment given by the management is correct or not, though it is not our area. But as a chartered accountant, you have to see here, it's only within 4 months he has gone for the court cases. Normally, we are not seeing one area. If any case has been filed before court of law, we are not going in depth into the transaction. Please go. Why the case has been filed before court of law? Why this account has become NPA? Why this account has become NPA within a short period? Whether this NPA has been reported to RBI correctly or not, everything you have to see. So here, the staff accountability will be fixed by the management if there is any fraud, or this staff accountability from the auditing angle, it starts from the application. So you have to do the audit very carefully. Now, what is the role of the auditor? Any finding is there by the auditor, don't hesitate to report, you have to report. And you have to report to the top management, including the report to the audit committee board. So here, I want to say one very important thing is don't yield to any pressure given by any management, because any branch management, you will definitely get a lot of pressures. That's why initially I said that I got 2 times life threatening. So don't worry at all. You whatever be the finding, you put it in writing. So you'll be very safe. Sometimes it may lead to very big fraud, and you have to report to the top management, including the audit committee board. And on the basis of your report, management will definitely conduct the forensic audit. Here, I'll tell another very mega fraud, one of the mega fraud which I have found out in my audit. So one staff, that is, I went for a concurrent audit of private sector bank. Then I have deputed my staff to verify the vouchers, and I have given instruction that other than these vouchers, if you find any letter, please bring the letter. Then I found that staff, that audit clerk, he has shown these some letters, and going through those letters, I found that it's a fraudulent letter. So it's a MCOP cases, that is accident claim checks. So it's accident claim checks, and in that a check, say, suppose if we can say that the check is issued because of some accident of husband, the check is being checked to the tune of 10 lakhs is issued to, say, Palniammal, and that lady has to put the check for collection through her account. But instead, they say that since I am not having any account, I am just asking the bank to collect my check through some other account. So this that means under Negotiable Instrument Act, account pay check has to be collected only in the name of the beneficiary and not in the name of the other person. But there is a letter signed by someone. We don't know the I don't know the evidence. Who has signed the check? Then when I added these types of instruments, I found that in 6 months they will encash 100 crores. It is more than 100 crores of checks of different accident claim parties only through this account. So that is a violation of NI Act, that is Negotiable Instrument Act. Then I went further. Who is the owner of the current account? There is only one driving license is there. So it's all early warning. And I proved that it was a fraud. So there was only one driving license. I went to the place, then I saw that driving license, the person, current account holder, who has produced a driving license, he has expired some 7 years back. Some 7 years back, he has expired. But the branch has allowed to open a current account in a dead person name without making proper inquiry of KYC. Then I went further, we had discussion, then I found that the entire 100 crores have been swindled by some other guy other than the beneficiary. So this is a mega fraud. This is one of the mega fraud that I found out in my career. So KYC verification is also very much important. So when I reported this, immediately that's a private sector bank, that branch manager, AGM and GM, they have resigned the job. They pretty well know that it's a mega fraud. So they don't want to be kept under the scrutiny of CBI, but the case has already been taken by CBI and still case is going on. So everywhere fraud will be there. So don't leave even, that is my advice to you, is don't leave even a single piece of paper. You have to verify. So if you report one account as fraud or a red flag account, they will definitely conduct the forensic audit. What are the other highlights? Early warning signal and a red flag account, if that is there, the bankers, they will not sanction any further loan. And it's a responsibility of the bank to classify one account as RFA, a fraud account status. So the bankers, they themselves has to fix the account as RFA, that is red flag account or fraud status account. And if the account is being reported under fraud, no further loan has to be sanctioned. They have to file a case with the law enforcement authority, say CBI and police. There are some stages based on which they can make the complaint to CBI or police. But as a chartered accountant, and even in the appointment letter, you can see that's a very, very important thing. This appointment, in your bank appointment letter, the management, they say that at the time of appointment, you can make a report to the Reserve Bank of India if there is any fraud. But few bankers only fix the limit of 1 crore or 2 crores. But in few bankers, I noticed that if you find any fraud, you can report to CBI or police. You can report to Reserve Bank of India. So Reserve Bank, then simultaneously you have to report to the regional office and head office. And in turn, the regional office or head office, if the fraud cost 1 crore, they will refer the matter to CBI or sometimes police. So you have to see, as an auditor, you have to see whether there is any complaint filed before the law enforcement authorities, and whether the head office has fixed a responsibility irrespective of the status. What is meant by irrespective of status? Whether it's a assistant manager, branch manager, senior manager, chief manager, AGM, DGM, general manager, even against the board of directors, so the fraud responsibility has to be fixed. Irrespective of the status, you have to fix the accountability. Next point is whether the bank to bifurcate fraud cases into vigilance and non-vigilance. There are two types. In case of vigilance, they refer the matter to the investigation agencies, and with reference to non-vigilance, they dealt themselves. Non-vigilance is not a fraud, but it's a procedural violation. It's a deviation and violation. You have to see two things. In case if it is deviation, it is not a serious matter. If it's a violation, then it's a serious matter. So deviation is almost equivalent to non-vigilance cases. Violation is, it leads to vigilance cases. So this is the thing that you have to know. So banks, they have to bifurcate. When you report a fraud, they have to bifurcate the fraud into two things. One is vigilance and non-vigilance. And all other penal provisions applicable for willful defaulter is also applicable to the fraudulent person. So willful defaulter is a person who has got the money, but is reluctant to make the payment. Then he is called willful defaulter. Fraudulent person means he has already did the fraud. He did against bank funds. He has swindled the bank funds. So I can say that all the willful defaulters are not fraudulent persons, and all fraudulent persons are willful defaulters. So first stage is willful default. So you have to see what is the what is the mind stage of the borrower, whether he's ready to make the payment or not. So if there is any delay in making the payment, you have to be very, very careful whether it's a willful defaulter or not, and whether he's a fraudulent person or not. So it's a very big exercise. That is identification of willful defaulter, identification of fraudulent person is a very big exercise. So as a chartered accountant, you have to be very, very careful. There is a separate session for willful defaulter is required. There's a separate session for fraudulent person list also required. There are RBI circulars are there with reference to willful defaulter. There are RBI circulars with reference to fraudulent person is also there. Please go to the RBI side. Even I can say one thing. You go to the RBI side and type RBI circular on banks. So please read the RBI circular once in a week. Every week you have to read, because there are so many circulars that RBI they are issuing it. So please read it so that you can update your knowledge, because whenever you are going for the audit, you can be updated. And the latest updation, even I can say from the audit, it is not related to RFA or that is red flag account, even related to early warning signal person. The Reserve Bank of India has come out with their latest circular dated 12/11/21. Say that the bankers, they have to sanction the sanction letter with a due date. That is, it before 31/12/21, up to 31/12/21, there is no problem. Any loan sanction after 31/12/21, the sanction letter must contain the due date of the loan. So this will be very useful to identify one account as NPA. So these things you can know only from the RBI sector. So being a concurrent auditor, you have to be a master in reading the RBI circular. So without reading the RBI circular, don't go to the bank, because in the concurrent auditor report, there is one column whether the branch has violated the RBI norms or not, RBI circulars or not. You can cover this point. That is 12/11/21 circular you can cover. So my sincere suggestion to the fellow members, though the topic is related to RFA, but please read the RBI circular so that you can update your knowledge, you can update the bank audit. Next point is borrower defaulted and committed fraud, not eligible to get loan from banks, financial institutions, NBFC and other banks for a period of 5 years. Suppose if anyone has been identified as a fraudulent person, and though he has been identified as a fraud and every fraudulent amount is being settled, in spite of the settlement, you will not be eligible to get the loan from any bank, financial institution, NBFC for a further period of 5 years. So this point you have to see. So for this, please go to the, it's all early warning signal. Go to the process note. If you find the borrower has already defaulted and he has made the payment. So if they made the payment on which date? Say in the year 2022. So for a further period of 5 years, up to 2027, the bankers, they are not supposed to sanction the loan, but bankers, they sanction the loan. So this is a very, very important thing. Suppose if there is any fraudulent person, he is not eligible to get the that is loan for further period. Penal provision. Suppose if there is any person who has committed the fraud or any default person or any willful defaulters, the penal provisions are applicable because the directors, they are sanctioning the loan, and these penal provisions are applicable not only to the directors, it also covers the non-whole-time director also. Non-whole-time directors. Here I want to tell one very important thing. Suppose you have been appointed by the RBI nominee director, and if there is any fraud, then that director, he is not a whole-time director, but he is also liable for the non-identification of the fraud. So it's a very, very dangerous thing. So penal provisions are applicable to all directors, including non-full-time director also. And no restructuring or grant of additional facilities to RFA or fraud account. Because if you identify one account as RFA, that is red flag account, the forensic audit has to be conducted within 6 months. If you identify one account as RFA or a fraud account, then the manager, then the branch or the head office, they are not supposed to give the restructuring of the advances, because this account has to be kept separately. You have to be careful as a concurrent auditor. You have to be very careful whether any RFA has already been identified by the previous auditor, and after identification, any further loan is being given, whether any restructuring of the loan is being given, everything that you have to see. So another important point that you have to see as a concurrent auditor, no restructuring or grant of additional facilities after one account has been identified as red flag account or fraud account. And no one-time settlement is allowed. Because if one account has been identified as a red flag account or fraud account, against that red flag account, against that fraud account, the bankers, they never allow the one-time settlement. Even I want to share one important information. If any case is being filed before court of law, you can go and inquire why the case has been filed before court of law. This point I have already said to you. Once again repeating, if any case has been filed before court of law, please inquire why this case has gone to the court of this before the DRT. Sometimes the bankers, they want to take the cushion by filing the case before court of law. Suppose if you file a case before court of law, as an auditor, whenever you ask any question, they say that, sir, the case is pending before DRT, sir, I have no records. So here I want to give one suggestion. If any case is being filed before court of law, you have to get a letter from the advocate about the latest portion of the case. And even you can ask the advocate to give an explanation saying that why this case has been filed before court of law. You can get a report from the advocate so that everything you have to keep it in your file, because these are the basic working purposes that are required for you. And what are the so far we have seen the theoretical part and some practical issues. Hereafter we are going for the RBI's early warning signal. I already said the starting point, that is the raw material, is the early warning signal. If based on the early warning signal, it will definitely, you can have a opportunity to identify one account as red flag account. If you identify one account as red flag account, you can go and see whether this account may lead to fraud or not. So if you identify one account as RFA, and automatically forensic audit will be conducted, and it is the duty of the forensic auditor to report whether it's a fraud or not. That is within 6 months he has to complete. But RBI has come out with the early warning signals. These are the early warning signals which will definitely lead to red flag account. So I want to say this thing, because if you identify that account as red flag account, it may lead to fraud. So what are the things that we have to see? First thing I already said, it starts from the application, and if the application itself is not properly studied, then that is a starting point. From that, the fraud starts. So that is the initial thing. Now, this is a list I have taken from the RBI's circular. Default in payment to banks, sundry debtors, and other statutory. So this you can find from the bank statement. If the borrower has availed the loan, he has not made the payment as per the sanction terms and conditions, then you can ask whether the proper assessment is being carried out by the bankers at the time of sanctioning the loan. So default in payment. So first thing you have to see whether the management at the time of sanction of the loan, whether they have carried out the proper appraisal of the party. If there is no proper appraisal of the party, then there is a delay in making the payment, because if there is no appraisal and if the financial position of the borrower is not properly identified, then the party will definitely be a failure person. So default in payments to banks, this is a first starting point. So by looking into the loan account, you can see, is there any default, whether the party is following the sanction terms and conditions, whether he is making the payment on time or not. That also you have to see. It's a very, very important thing. It's one of the early warning signal person. In case if the party has failed to make the payment, suppose if you are a concurrent auditor, my advice to you is, please go to the unit. Please go to the unit. There you can find whether that party is actually running the business or not. Then you have a discussion with the party. And whether the borrower is having some problem or not. And you can ask the borrower, sir, why you are not paying. You are not full liberty to take this type of discussion, but you have to carry out the discussion only in front of the branch manager or the branch officers. Don't go alone and don't make the inquiry, because you have got no right to directly go and meet the customers. So default in payment. So what you have to do, you have to go and see the party, and first thing, whenever you are going to the party, please ask for the electricity card. Electricity card, if it's a manufacturing industry, if there is an electricity payment, that means the unit was functioning. If there is no electricity units consumed, that means there was no production at all. So this default in payment is very, very important. So when you identify, when you saw that there is a default in payment, please go to the unit for inspection and take your decision, and whether it is the RFA, whether this case is suitable for the RFA or not. From there, you can take the decision. Then default in payment of sundry debtors. So what is the sundry debtor? That is one word called as OPM. That is OPM. OPM means other people's money. Sundry debtors. Suppose if the party has sold the goods to a customer, and if the customer has not made the payment. Okay, here default in payment to the sundry debtors. Sundry debtors or sundry creditors or any statutory bodies. Suppose if there is a delay, why this party is not able to make the payment to the suppliers? Everything you have to be very, very careful. And if the party is not able to make the payment on time, and if there is any case has been filed against the company, that also you have to see. See, this you can see from the latest thing is IBC, that is Insolvency and Bankruptcy Code. And nowadays, all the companies, most of the companies, they are coming under the purview of IBC, and most of the suppliers, they filed the case before NCLB also. If there is any such cases, that also you have to inquire. And why there is a delay in making the payment? That means the party is running out of the funds. We have given the loan. Where the loan has gone, whether it has gone to the raw material, and if he has purchased the raw material, whether he has produced the goods on time, and whether the goods, if the goods are produced, whether the goods have been sold, and whether the goods have been sold to a proper person, why the money has not been realized. So everything you have to see. So default in payment of sundry debtors and other statutory bodies. So suppose if the customer is not able to make the municipal rent or some GST payments or some income tax payments, or if there is any delay in making the payment, sometimes they make the payment belatedly and a penal interest is being charged by the GST department, you have to inquire why there is a delay and is there any financial strain, whether that financial strain is a permanent in nature or temporary in nature. If the thing is permanent in nature, you have to go and inquire why there is a permanent in nature with reference to financial strain. So there are chances if these type of transactions there, it may lead to RFA, and in which in turn run into some fraud, because when we can say that if there is any delay in making the payment, the party would have diverted the funds to some other purpose. So as per RBI announced, if there is any diversion of funds, then that amount to fraud. Next one is bouncing high value checks. This is also very, very important thing. For this, please ask for the check return register. Normally in concurrent audit, we are in statutory audit, we are not seeing this, but in concurrent audit, we have to see the check return register. In check return register, why the particular customer's checks have been returned, why he has issued so many checks, and why he has not come and remitted the money at the branch to honor those checks. What is the intention of the borrower? Everything you can identify if based on the bouncing of the checks. Though they put the bouncing of high value checks, even I can say one thing, even the bouncing of 1,000 rupee checks also you can have a very good, you can have very dangerous view with reference to RFA. So even they are not capable to pay the 1,000 rupees, how they will be able to pay some 1 crore? So these views you have to take. So that this situation of early warning signal may lead to one account as RFA. Next one is raids conducted by Income Tax Department, GST, FEMA, regulatory authorities. This we have discussed. So you have to, as a chartered accountant, as a statutory auditor, as a even we can say that as a credit auditor, you have to see why there is a raid conducted by these government authorities. This is the reason whether the party has cheated the government. If the party has got the intention to cheat the government, why not this for the bankers? Definitely it will. Even they will definitely try to cheat the bankers. This is also another important area. If there is any raid conducted, but if there is any statutory violation, only these raids have been conducted by the regulatory authorities or tax authorities. So you have to go and inquire about the real situation. Even we can say one thing, suppose if there is any raid and if there is any tax demanded by the Income Tax Department, they will come and definitely attach the bank statement. If they attach the bank statement, what will happen? Your money will not be, but that is you can realize the money, but that will not be allowed to be used for the further production. If there is no further production, automatically the party account will become NPA, and definitely it will lead to one of the stages of RFA indirectly because of some fraud committed in the payment towards tax. The account may land in a fraudulent activity account. So if there is any raid, it's also another early warning signal area wherein you have to be very, very careful. Another thing is frequent change in the scope of the project to be undertaken by the borrower. A loan is available for, say, for furniture business. Immediately after receipt of the furniture business, you say that furniture business is not good. I am going for the say building construction area. Then after some time they change the project to some other thing. So if the borrower, after the receipt of the money, if they change the project frequently, definitely he will create a very big problem for the bankers. So that is also another situation wherein this early warning signal of frequent change in scope of the project will go to the classification of RFA, that is red flag account. And underinsured and overinsured inventory. So here, underinsured. Normally, this is a very, very important thing. Every concurrent auditor, every statutory auditor, every stock auditor, every credit auditor, they have to see whether the stocks have been insured properly or not. Normally, what the bankers they do, suppose if they are sanctioning 10 crores loan, they are taking only 10 crores insurance policy against the stock. Even in that, they say that the 10 crores is related not only to stock, it's related to building and some other vehicle also. So if the loan is 100, if the loan is say 10 crores, then the insurance has to be done at least for the 13.50 crores. That is after considering 25% margin. In case if the insurance is not there, insurance is there, but only to the extent of the loan amount, then that type of insurance policy is called as under insurance policy. And if anything goes wrong, then then the only pro rata basis only the bankers they are getting the insurance coverage. So as a concurrent auditor, you have to see whether the insurance policy is being carried out as per the bank norms. And another thing is whether bankers class is included in the insurance policy. That point also you have to see. This is called as under insurance. And another thing is, this also happened in one of my cases at Bangalore. One of my clients has got a stock of something around 70 lakhs, but he has insured only to the tune of 20 lakhs. But due to flood at Bangalore, the entire stock has been damaged. He was not in a position to recover the entire amount of 70 lakhs, but the insurance is done only for the extent of say 20 lakhs. So that means the stocks are worth about 70 lakhs. So 20 divided by 70, he is able to realize only 0.28. To the extent of 2,85,000 only he was able to realize, and he is now in big trouble because of this type of under insurance. So as a concurrent auditor, you have to see why they have done the under insurance. And they say that our insurance policy is cost of insurance policy is more, so I have done the under insurance. So this is also one of the red flag account. Reason towards the red flag account, why this type of activity is done. And same is the case with over insured. So that means there are stocks available only to the tune of say 100 rupees, but the insurance has been done for 250 rupees. That means whether the intention of the party is to have some bad claim, say by way of some fire accident or by way of some theft and everything, they can claim more amount. So as an auditor, as a concurrent auditor, you have to be very, very careful whether the insurance policy is underinsured or overinsured towards the inventory. And fabricated invoices, this is very, very dangerous thing. So the rule says at the time of sanctioning the term loan towards the purchase of machinery, the payment has to be made only to the supplier of the machinery. The term loan is being sanctioned based on the invoices produced by the borrower. It is the invoice is not produced by the by the banker. The invoices are being produced by the borrower. And nowadays, due to this GST effect, say to the tune of 28% or 18%, what the borrowers they say that, sir, it is very difficult for us to pay the GST. So we will do, even they will ask the branch manager and they say that, sir, we will give some invoice and can you make the payment? But we will definitely bring the machinery to the unit. And if these type of invoices have been produced, and this is called as fabricated invoices. So in invoices, what are the important points that you have to see? Otherwise, these things that will lead to red flag account, and simultaneously it will lead to fraud account. Here, the thing is name of the party, address of the party, then GST number that is quoted in the invoices, and what are the items that they mention in the invoices. Nowadays, the bankers they started to do the inspection of the invoices address. Now, suppose if you got the borrower has produced any invoices towards purchase of any machinery, the bankers they will go and verify the person who has issued the invoice. That's a very good habit. Even you can have as a concurrent auditor, you can also go and verify it. And where the money is being given credit, whether the credit is being given to the customer account or to the supplier. See, here I want to share one of the experience. See, one of my clients, he is not interested to make the GST payment. What he did, say, let us think there's a system weakness. So the DD is issued. say, suppose if it is RAM Enterprises, we can say that it is a RAM Enterprises. In this RAM Enterprises, the DD has been given towards the RAM Enterprises based on the quotation. But this client, what he did, he opened a separate name, he opened a separate current account in the name of RAM Enterprises by way of producing the Udyogada, and he has given his wife's PAN card as the proprietor. In wife's name, he has taken the RAM Enterprises current account. This RAM Enterprise check has been routed through that wife account. The money has been taken by the client. He has misused that funds. So the verification of invoice is very much important. Here, then that my client, he was caught, and even he has been booked under by police along with his wife. So these are all the cases that may lead to RFA. So as an auditor, you have to see whether the invoices produced by the borrower is a genuine or not. Though it is not our role, but as an auditor, you can view and you can see whether those invoices are genuine. Sometimes you can make a telephone call to that number that is stated in the invoice. When bankers, they are doing this exercise. So this is another important area wherein this early warning signal of fabricated invoice may lead to the situation of RFA. From the invoice itself, he is doing the fraud. So definitely he will be called as a fraudulent. So as a concurrent auditor, you have to verify the invoices produced to you, because based on this invoices, the bankers, they have sanctioned a loan. So that point you have to see. And next one is dispute on title of the collateral securities. What is a very, very interesting case. So here I want to tell one very important thing is you should know the reading of the title deed. Normally, what are the bases based on which one can avail a legal opinion? He has to produce the original document, then parent document, then revenue records, house tax receipt, then demand extra receipt, town survey plan, FMB sketch, encumbrance certificate for 30 years. Then apart from that, if the property has occurred through a death, then they have to produce the death certificate and legal action certificate. And you should have the capacity, you should have the knowledge, you should have the skill to write the tracing of the title on your own. Please cultivate this habit. As a concurrent auditor, please cultivate this habit. How you can form your own tracing of the title. Then you compare this tracing of the title along with the opinion given by the advocate. Then compare it. If it is okay, it is okay. Even if you differ with the advocate, you can make a suggestion. Okay, this is one thing. So my suggestion here to the concurrent auditor, you should be a master in preparing the tracing of the title. Okay, and here this dispute on title of the properties after sanction of the loan, there will be a dispute between the brothers. There will be a dispute between the family members. There will be a dispute between the neighboring person. And even sometimes the government may say that, sir, the property belongs to government. So these are the disputes that you can get after sanction of the loan. If that is the case, if there is any dispute, then that point you have to cover in your report. And this is also another base, because if the title of the property is that. See, here I will tell another very interesting case. I want to share this case. This I have found it in my credit audit report. There is a concurrent auditor is also there, but I went especially for the credit audit. So my habit is I used to refer only the legal opinion, but I never rely on the legal opinion. So I traced my own title. The title goes to the year 1983. So I went for the audit for the year ending for the year 2019. But when I traced the title, the property title went to the year 1983. Then I found that in the sanction letter issued by the banker, it's a spinning mill. It was a spinning mill. I found that the spinning mill, as per the sanction letter, it has got 6.19 acres. Valuation says 6.19. Then legal says 6.19. Factory license has said 6.19. All government records, they say that 6.19. When I trace the title goes to the year. It went to the year 1983. There I found out in the 1983 document, I found out only the company has got a title of only 3.19 acres. But instead of 6.19, the company has produced a title deed of 3.19 acres. That means there was no title to the tune of 3 acres. Okay, there was no title. Then I reported, because I worked for some 1.5 days to ascertain whether my findings are correct or not. Then I discussed this with the branch manager. Then he called the advocate and also the valuer, and both of them have come and they have seen the title deed. Then they say that, sorry sir, we did a mistake. Sorry sir, we did a mistake. So the loan is to the tune of 14.40 crores, but 6.19 acres, based on 6.19 acres, 14.40 crores loans have been sanctioned. Okay. Then I requested the manager, because the advocate and valuer, they both of them said, sorry sir, we did a mistake. Now the public funds of 14.40 crores are in trouble. Then I request the manager, sir, kindly do the survey of the property. When they did the survey of the property, it is called, then they say that, let us take, this is a 14, let us say this is a 14, that is 6.19 acres. That 3.19 acres is situated in the middle of the land. That means it is called as landlocked property. It is called as landlocked property because there was no passage to the document. So I clearly proved that the title of the property is totally, it is not correct. It's totally wrong because there was no extent of 6.19 acres. The title, actually the company has got title of only 3.19 acres. And I went further to prove that it's a landlocked property. So this is the effect of a chartered accountant. Being a concurrent auditor, being a statutory auditor, credit auditor, you can do this exercise. So now I created, there is a dispute in the title. So next thing what I did, since it's a landlocked property, I classified the entire loan as the loss asset, saying that it is an erosion in property value. As per NPA norms or IRAC norms, it's an erosion in property value. Now I created, now the bankers, they want to sell the property because that account has already become NPA. And everybody has said that, no, the unit has got no title over the property because this is a title dispute on the title of the property. It leads to red flag. So I created this. So if there is any dispute on title of property, you can get this from, you yourself also can find it. And if it is being reported, then you can get the list from the banker and you can say that there's a dispute and you can cover this early warning signal, that point you have to cover under the RFA. Then wide variation in costing of the project. Suppose if they say that this is a costing and over costing of it. Suppose if you say that, sir, the project cost is 100 crores. If 40 crores have been utilized and the remaining 60 crores have been sidelined, so diverted, then that is a early warning signal. So there is a wide difference in the project. Sometimes the project cost is only 50 crores, but your actual cost is 50 crores, but you have got only 20 crores. That is also a variation. So sanctioning of underfinancing also make the project as a failure one. So wide variation in costing of the project can make it is also to be treated as one of the early warning signal as decided by the Reserve Bank of India. It may lead to RFA and then simultaneously, because if the project is over costed and instead of 100 crores, only 40 crores have been utilized and 60 crores have been transferred to some other purpose, that's a fraud. So it's a wide variation costing of the project also needs important attention from the concurrent audit angle. Funds coming from other banks to liquidate the outstanding loan. So as for the latest RBI guidelines, the current account should not be opened with the other bankers other than the lending bankers. So suppose there is a loan account, the EMI is coming from some other bank. So that means the funds have not been routed through the lender bank. That means the party has got some other account with some other bank. So whenever the party has got some other account with some other bank, without the bank's permission, that also a violation of RBI norms. So you have to see while verifying the term loan account, while verifying the cash credit account, you have to see where the credit has come, whether it's a genuine credit, whether the credit has come from the sales, whether the credit has come from the jewel loan. And if the credit has come from some other bank, by way of transfer, you have to inquire whether it is a debtor collection. So concurrent auditor, you can do it, whether the money has come as a debtor collection or not. So coming from other banks, suppose without this bank's concern, that means the bank, that is the borrower has got two accounts, he can divert the funds. That situation also may lead to RFA. This is one of the green signal. And foreign bills, here I want to tell another interesting case, that is funds coming from other banks to liquidate the outstanding amount. It is a prohibited thing. Here I've got a forgotten the case, but I've got a very good case for this. I'll share my experience later. Next thing is foreign bills outstanding for a long time, hawala. Here I will tell. See, it has happened in even in my client's case. He has got foreign debtors to the tune of 10 crores. He has availed cash credit loan of that is packing credit loan of 4 crores. But he has produced the goods, he has sent the bill, he has discounted the bill, and the bill is sent for collection. Say the country is Sri Lanka, for example, the country is Sri Lanka. The debtor outstanding is 12 crores. But that 12 crores has never come to the bank. It was outstanding for more than 365 days. More than 1 year it was outstanding, but money has not come. But when I inquired this with the party, he said, sir, I requested the Sri Lankan buyer to request his friend at Chennai to make the payment to me in Indian rupee. I received the money because when the buyer of the Sri Lanka, if he has remitted the money has to come to the loan account, and loan account has to be closed, and no further, I cannot use the funds for my business purpose because the loan used to 4 crores. If 1 crore has come, only the bankers, they adjust directly to the loan account and they will not release the 1 crore for further protection. Then he made a request to the Sri Lankan buyer, sir, please make the hawala payment. That is, he has requested the Chennai wala to make the payment to him. Then he has received the case. Then he has got the outstanding. Then after 1 year, 1.5 years, what is it? He has the same thing ulta. He has sent the money to the Chennai wala. And Chennai wala said, sir, I have received the money. Then that Sri Lankan buyer has made the payment to you. So the delay in making the payment, foreign bills adjustment, whether it's the hawala or not, if there is hawala, it is almost a fraudulent transaction because the violation of FEMA, even the party will also be arrested. So as an auditor, you have to be very, very careful that whether foreign bills are outstanding for a long time, you have to probe. It's also another early warning signal because if you ignore this, then there may be a chance for fraud, but you'll be if you fail to identify, then you'll be caught. So this is also another very interesting and important early warning signal identified by the Reserve Bank of India. Then onerous queue, that is tough class in sometimes at the time of issuing bank guarantee LC and standby LC, they say that you have to give this condition, you have to fulfill this condition, then only we will give the BG, but there will be a violation of that onerous clause. They say that you have to come and remit 2 crores, then only we will 2 crores plus your property, then only we will give you bank guarantee of 10 crores, but without receipt of this 2 crores, but based on the branch, property value, the manager would have given the bank guarantee. This type of tough classes would have been omitted by the bankers. So that means it's a violation in sanction terms and conditions. That is also another red warning, red flag account signal. Next one is in merchandising credit, import leg is not revealed to the bank. Suppose if you are say any import has to be informed to the authorized dealer, that is the bankers. So from where you are getting the goods, that has not been informed to the bankers. He has got the LC, but the LC is being issued to some Mr. A, but goods should have been purchased from Mr. B. The relationship between A and B has not been revealed to the bankers. But bankers say that yes, goods have come, so assets have been created, they are keeping fine. But that should not be the case. In case, because the LC is being given credit to A and goods have come from B. So that is permitted provided this agreement is being approved or informed to the bankers. Without information, if that is there, then this is a very important thing. And at the time of audit, you have to see the LC is being given, or the goods to LC is being given to Mr. A, but the goods have been supplied by B, whether the same has been informed to the bankers or not. That means if it is not there, then it is a early warning signal person. There will be chance of fraud. I will tell how they do it. That is at the time of import, this party would have given some higher payment. Then at the time of supply, he will give you some lower, inferior quality. So that may also affect the production. There will be some chance of loss of production, or sometimes it may lead to fraud. So import leg is not revealed to the bank. Next one is request from the borrowers to postpone the goodwill inspection due to flimsy reasons. Suppose if the manager say that, sir, tomorrow we are coming for the inspection, then the borrower say that, sir, tomorrow it is not possible, sir, our owner is out of station, and if you are the owner, then the owner say that, sir, I am out of station, I will not be available, you can come on some other day. So these are all the things. You can postpone the inspection due to some flimsy reason. That is also another important thing. So request from the borrower to postpone the goodwill inspection due to flimsy reason, and delay observed in payment of outstanding dues. If there is any delay, and if it is being not paid on time, that is also one of the early warning signal. Next point is financing the unit far away from the branch. It's very, very dangerous. Suppose if you are sitting at one place, and if the unit is situated some 50 kilometers, it is very difficult for the manager to go and do the inspection. So the unit which is situated something around, say, after 50 kilometers, then the unit can do anything, because the manager, though he has financed the thing, he was not able to go and visit the unit. Only the staff of the person, they are coming regularly to the bank. Whatever the staff say, the bankers, they are following it. Whatever they say, they hear, but they are not taking any enough step to go and visit the unit. So during the audit, if we find, if the bankers, they find any unit which is far away, say, suppose if the unit is, say, something around 100 kilometers or 75 kilometers from their branch, then you have to be very, very careful. This is also one of the base for the RFA. I'm going fast because we are running out of time. So clients not acknowledged as debt high, because if there is any loan and the bankers, is the condition of the bankers, the borrowers, they have to acknowledge the debt, and the debt is not acknowledged by the borrowers. Why the borrowers, they have not acknowledged the debt? So that is also a serious nature. So debt acknowledgement. So it is nothing but a pro note is valid for a period of 3 years. And once in 3 years, they have to get a fresh acknowledgement update, say AOD, acknowledgement date, or waiver letter. If it is not signed by the borrower, then you have to go and see why these pro notes have not been signed. As a matter of rule, if there is no pro note, you cannot file the case before court of law as it is, because you have lost the right to file the case before court of law. Then you have to ask the reason why the acknowledgement update has not been obtained from the borrower. It is also one of the early warning signals given by the Reserve Bank of India, which in turn may lead to RFA. And frequent invocation of bank guarantee and development of LC. That is, the borrower has got the bank guarantee. So within 3 months, the beneficiary would have suddenly invoked the bank guarantee, and bankers, they have to make the payment, and the borrower will come and make the payment to the bank. Again, they did the same exercise. So frequent invocation of bank guarantee. So for this, please verify the bank guarantee register and LC register. If there is any frequent invocation of bank guarantee, you have to probe as a concurrent auditor why there is a frequent invocation of bank guarantee. That situation may lead to RFA. And funding of interest by sanctioning additional facilities. Suppose the party is not able to make the payment, if the party is not able to make the payment of interest, the bankers, in order to safeguard the fund from NPA, they will sanction additional facilities. So this additional facility amount has been given credit to the loaner. So as an auditor, you have to be careful whether any additional facilities have been given, why the additional facilities have been given, and where the credit has gone. So funding of interest by the sanctioning authority, this is also another early warning signal. The same collateral charged to a number of lenders. Say, suppose it's a common property. There are some 2 units or 3 units. If it is same thing, one person is here. That is one, Mr. A is the owner of the property, but the same property is taken collateral for some 3 loans or 4 loans. You have to probe why the same property is being taken as a collateral to 4 loans. because the third party security should not be accepted by the bankers. And if they accept the third party property, what is the relationship between the borrower and the collateral person? That is collateral security owner. That point you have to see. So this is also another important thing, that early warning signal that has been identified RBI, which has led to RFA. Next point is concealment of vital documents, that is master agreement and insurance coverage. Next point is floating friend and associate companies by investing borrowed funds. That is, the loan is being sanctioned by the bank to a particular account, and this party has diverted the fund to some other concern, it's a sister concern or associate concern, and he has put that capital as the transfer the money as the capital in the associate concerns. If that is there, then that is also one of the early warning signal. That means that's a fund diversion. Fund diversion, as per the RBI norms, it amounts to fraud. So floating, that is by investing borrowed funds, yes, transfer the money to associate concerns. So as a concurrent auditor, you have to see whether the transfer is within the rules or not, whether it is being done with the bank's permission or not. Everything that you have to see. Next point is reduction in the state of the promoter or director. Suppose in any company, it has happened in most of the companies, that is at the time of formation of the company, there is a promoter and he has invested huge amount. So slowly he is diluting his capital. He is taking his money back. Why he is taking the money back? So as an auditor, you have to see limited company, what is the last year share capital shareholders quantity, and this year's shareholders quantity. You have to compare it. If it remains same, okay. And suddenly or slowly, if they are diluting the capital, that is also one of the transactions which may lead to RFA, and indirectly it end with the that is, they may dissolve the company or they may sell the company indirectly. So this is one of the situations which may lead to RFA. Next one is resignation of key person, frequent change in the management. Suddenly one key person has resigned, and then you, as an auditor, you have the right to ask why he has resigned. Being managed by some technical director, suddenly he has resigned. Why? That point, suppose if the company is being run based on the advice given by the technical person, and if he suddenly resigned, then the company will be in trouble. So that point also you have to encourage. This is also another important thing, that key personnel, and if you got contact, then you can contact with the manager why he is resigned. The reason for resignation you have to see. Even the resignation letter, the manager should have a copy. And suddenly every year there is a change in management, frequent change in management. A and B they are doing the business, suddenly C comes, A goes. Then B and C is there, then D comes, B goes. So why? That's a frequent change in the management. That point also you have to see. This is one of the SFA situation. Substantial increase in unbilled revenue year after year. Unbilled revenue year after year is number 2 business. Then a large number of transactions with interconnected companies and large outstanding from such companies, because there are large transactions between the sister companies, and when he sold the money to the sister concern, the money has not come. Because this company's money is being parked in other company. So this company has not been able to make the payment to the banks, but the funds are being locked in other company. If that is the situation, you can see from the balance sheet of the company, and you can significant movement in inventory disproportionately higher than the growth in turnover. Here, turnover is not. Turnover is disproportionately higher than the growth in turnover. You have got the opening stock, purchases there, then suddenly you have got high stock but less turnover. So that means indirectly they say that you have to analyze the P&L account, and balance sheet, P&L account and balance sheet. This is also, this exercise also you have to see. That means lot of purchases have been there, and indirectly they say that whether they are doing number 2 business or not. Stock is there, but turnover is less. Next case, movement of stock is there, that is turnover is less, but debtors are. So this is also another situation. This when you are signing even the tax audit report, you have to be very, very careful. See, in one of my cases, I found that the sales is 5 crores, but the debtor is 35 crores. Sales is 5, debtor is 35 crores. That means last year debtors and the year before debtors have not come. So this is also another important area. If you happen to see this in the account, It's also one of the early warning signal, and which may lead to the red flag account indirectly, because the turnover is being hidden, or sometimes without turnover they are doing the business. That means there is a huge debtors. So without collection of the debtors money, they are doing the business. That means some negative aspect is there. Whether they are doing some hawala or that point you have to see. So this 26 and 27 are very much important. That is, purchase is there, sales will be less, and stock is more. Here, receivables are more than the turnover. So yearly, the turnover is 5 crores, the debtor is 35 crores. You have to be very, very careful. What happened to the turnover? Why? What happened to the debtors? Why the party has not collected the same thing? Then disproportionate increase in the current account. Suppose suddenly the bank, there is a sudden increase in turnover in current account, if it is there, then you have to see from where the money has come. Then significant increase in working capital borrowing as percentage to the turnover. Suddenly, this bankers, they are giving huge money towards the working capital. Why the business, why the party requires additional borrowing? Whether there is any change in the production, whether there is any additional orders have come, whether they have installed any additional machinery, everything you have to inquire. Then only you have to come to the conclusion. There is no fraud. But if without that, suddenly working capital goes on increasing, but turnover is less. Normally, the rule says whenever you avail cash credit loan, say 5 lakhs, the turnover should be minimum 25 lakhs. That is as per the Nayak committee report. Turnover is, say, loan is 5 lakhs, the turnover should be 5 times, that is 25 lakhs. But loan is 5 lakhs, the turnover is only 11 lakhs. That means the increase, there is an increase of working capital, but it has simultaneously turnover has not increased. So why it has not increased? That means you have to see, is there any fund diversion or not? Then critical issues highlighted in the stock audit report. So the stock auditor can say that, sir, there is no stock. Even I found only less stock. Here I want to tell another important, very interesting case. So one of my customer, one of my client, what he did, sir, every year I'm getting 50, every month I'm getting 35 to 50 lakhs profit, but I'm running out of funds. So can you analyze? Then I searched, because he has availed a loan of something around 14 crores. Then when I did the exercise, I found that there was a debt stock of 8 crores in his account for more than 7 years. So this I pointed out in my internal audit. As I've gone for the internal audit, I have commented on this, but luckily that stock auditor has not seen this. He said that stocks are there. Then he maintained his report very silent. But as an internal auditor, I pointed out there is a stock of 8 crores. It's a dead stock for more than 8 years. So as an auditor, you have to see whether the stocks are dead stock or non-moving stock. That's a very, very important thing. So whether the same thing has been pointed out by the stock auditor or not, even there is one column in the stock audit report. What about the status of the account? That also you have to give. You have to see whether that account is a standard, non-standard, or standard, substandard, doubtful, or losses. So these things also you have to get from the stock audit. So whenever I go, I used to say that whether the account is standard or not. So this critical issues you can get from the stock audit. This is also one of the early warning signal. And increase in fixed asset without corresponding increase in turnover. That means when project is implemented, diversion. So here the fixed asset has increased, but correspondingly there is no increase in the turnover. So this you can get the information from the analyzing the P&L account and the balance sheet. If that is there, this is also one of the cases. That means if there will be a diversion of current asset, cash credit money into the fixed assets. So if that is there, then that's a diversion of funds which amounts to fraud as per the RBI norms. So increase in borrowing despite huge cash and cash equivalents in the borrowing balance is a very, very interesting thing, because when you go and see the balance sheet, you found a cash of say 35 lakhs. The party has gone to the bank, sir, I need 5 lakhs. So as per the balance sheet, you have got a 35 lakhs, you can use it. But they started to increase the borrowing. So this is also another indication that the unit may maybe a failure one, or there will be some number two business, or the accounts are not genuine. So this is one of the reason for the red flag account. And finally, liabilities appearing on the ROC search report not reported by the borrower. Suppose there is a loan, but it has not been reported to ROC, and substantial related party transaction. If you notice in the account verification, that also thing that you have to cover in the red flag account. Next one is material discrepancies in the annual report and significant inconsistencies with the annual report. Then poor disclosure of materiality, adverse information, and no qualification by the standard, because the auditor has given a clean report, but on seeing the report, if you find any material adverse thing, then if you are a concurrent auditor, you have to see it's a poor disclosure done by the statutory auditors. So bankers have to be very safe. So this is one of the base for the red flag account. Then frequent change in the accounting period or accounting year. Now it is not possible. That is, accounting policies are possible. Frequent change in accounting period, that is financial year to calendar year, then calendar to financial year, that is not possible. But here now we are facing problem is from the temple accounts. It is now they are maintaining the system of accounting in Pasali year, but our income tax they are maintaining in the financial year. That Pasali year starts from July to June, whereas the financial year starts from April to March. So this is a problem. That's a practical problem that we are getting in temple accounts. But if they change frequently the accounting period, why they want to change why they are doing the change of the accounting period, that point you have to inquire. Next point is frequent request for the general purpose loan. Sir, I want a loan of 10 lakhs. I want a loan of 15 lakhs. I want a loan of 25 lakhs. I want to go and meet some personal expenses, this and that. If the bankers, they are allowing these type of general purpose loans, that means there is a fund diversion. Otherwise, the party may be in trouble. And bankers, in order to help the party, they are giving the sanctions as a temporary loan of some 3 months or 6 months. So frequent request, if it is there, then it may lead to a situation of RFA. Then movement of an account from one bank to another. Suppose normally as per the takeover norms, within a period of 1 year, that loan cannot be taken over by another bank. Suppose A banker has sanctioned the loan, then B banker has taken over A bank due to business. Then C bank, they have taken the loan from B bank. If these type of movements are there, that means the intention of the party is not to do business. You wanted to gain some more funds. And there may be chance for some fraud. So this is also one of the early warning signal thing. Then frequent ad hoc sanctions, you can see not routing the sale process through the bank. This is also very important thing. So you have to go and see the current account, and if you see the total turnover is say 25 crores, and if the money given credit into the cash credit account is only 10 crores, that means 15 crores has gone out the bank either in the form of cash shares or in the form of the money routed through some other. So not routing the sale process, that is there. That is also another one of the RFA base, and LC is issued for local trade and related party transactions. Huge value of RTGS payment to unrelated parties. Suppose you are doing business. The customer is doing the business, and if he is doing, say, for tire business, the payment has to be given only to uploader. Suppose if he is the distributor for uploader, the payment has to go to uploader. Instead of that, he is making payment to, say, Mr. X, Mr. Y. That means huge RTGS payment have been transferred from this account to unrelated parties. That also amounts to fund diversion. So even RTGS payment, that means directly RBI say that you have to verify the RTGS payments also. From what is the end use of RTGS, that you have to see. Heavy cash withdrawal in the loan accounts. Suppose if that's a loan account, so the loan account should be used only for the purchase of raw material or purchase of machinery, or sometimes to make the creditor payment. But instead, the party has gone on withdrawing. They say that, sir, I have to make the wages payment. So heavy cash withdrawal, if it is noticed, then that point also you have to see. And non-submission of original bills. So yes, so that is bankers have sanctioned the loan to a machinery supplier, and the machinery supplier has not submitted the original bills, then the bankers, they themselves go to the unit and they have to confirm why the original bills have not been produced. So as an auditor, you have to see if the bankers, they are not having the file copy of original bills, then that means the funds should have been gone to some other case, some other head. So this is also one of the base reason for the RFA. And the list goes on, goes on, goes on. So everywhere you can find the early warning signal person, and being a concurrent auditor, you have to be very, very careful. Otherwise, you will be in danger. So early warning signal person, I want to say that it is a raw material and RFA is a working process. So to go to the working process, raw material should be a quality one, and you have to see the raw material correctly, then go to the RFA. And if you are not analyzed RFA properly, then that may lead into fraud. With this, I am just closing my presentation, and thank you very much for the patient hearing. And what is this is a ocean? This red flag account session is a ocean, and to the maximum extent, I covered this subject. And thank you very much. I once again I thank the chairman of Internal Audit and Management Accounting, and as well as the vice chairman to give me the opportunity. And also I thank the secretary of the committee, Aarti, for giving me this opportunity. Over to the secretary for further proceedings. Thank you. Nandri, Vanakkam.
Thank you, sir. Thank you, sir, for such a wonderful session. I thank you for analysis the situation, how frauds occur in banking sector, and explaining the incidents which help the create suspension in the mind of professional to red flags the incidents so to prevent it occur, and further highlighting that risk mitigation strategy to trace and detect that fraud signals. Yeah. And as well as highlighting the role of internal audit in fraud detection. I would like to thank our chairman and vice chairman for supporting us conducting this event, as well as my team, as well as the IT person who is handling the event. Also the participants who are attending the SET seminar. Thank you all. Thank you all. Now we would leave for the event.